Well, Axis Bank numbers are with us, and it looks like a fairly decent set of numbers. Look at the net NPA and the gross NPA. In aggregate terms, the numbers have gone down, and as a percentage of total advances, it has gone down by about 30 basis points, 20 basis points when it comes to gross, and as far as net NPAs are concerned, it's another fall by about 20 basis points. The aggregate net NPAs, actual NPAs created, have also fallen. That is gross NPA at 30.85. I mean, it's a small fall, but the important point is, despite loan growth, they've not fallen. But it's over to Abhishek, who has more of the numbers. Do we have details of loan growth, Abhishek?
Yes. Lata, I'll just run quickly through the P&L. It's a beat on NII and the profits. So if you look at the NII growth, it has come in at 18.4%. We were working with a number of 14.5% in terms of the NII growth. And if you look at profits, the profits are at 1,681 crores. That compares to a poll of 1,276 crores. So on both the parameters, the NII and PAT, it's a big, beat. You look at the loan growth.
Yeah,
overall loan growth is 12.9%, but the domestic loan growth is at 18%. So that's a heartening factor that, the domestic loan growth remains strong, and the net interest margin on account of the...
Actually, the important point is that in spite of showing an 18% loan growth in terms of the book growing, you have seen the aggregate NPA falling, both gross and net. Actually, correct. Gross is flat, about 100 crores less. But the important point is the book is 18% bigger. And in spite of it, you have absolutely no fresh accretion, which is definitely a positive. You're telling me margins.
Yeah, the net interest margin is at 6-quarter high of 3.47%. Last quarter, it was at 3.36%. And the same quarter in the previous fiscal, it was at 3.38%. So there is net interest margin improvement on both the parameters, whether you check sequentially or whether you check YOY. And it's at 6-quarter high of 3.47%, largely led by the strong domestic loan growth, although the costs have increased. But as we have seen with other private banks, the product pricing has been much better. Therefore, you look at the loan growth, overall loan growth is at just 4% quarter on quarter, but the interest income part is up 6.4%, which shows that they have been, in line with SDFC Bank and other private financiers. They have been able to price their products at a better rate, leading to an improvement in margins. Lata,
okay, actually, if you look at the deposit growth as well, that seems fairly impressive. I don't have the quarter on quarter. This is 4.53 as of 4.53 lakh crore has become 5.14 lakh crore in 9 months. Abhishek, if you would have the quarter on quarter, I don't have it right away. But even the deposit growth looks fairly strong.
7.9% quarter on quarter.
Okay. Total deposits year on year has grown by 26%. And I mean, that's very good with the current and savings account, which is, the cheapest money that a bank can get, current account, that is growing by about 17% year on year. So that also looks like it's extremely a clement set of numbers, always adding to margins. The MTM provisions on investments were 322 crores, which were written back. Provision coverage has increased to 75%. It was 73%. Now it's become 75%, which is again a sign of very good health. They've got a write back of provisions. That again is a positive. Clearly, they've managed their investment book very well. But I guess the most important numbers are that the bad book or the loans that are not coming back have remained static. And more importantly, outstanding BB and below have reduced by 14% to 7,600 crores. So even if you believe that there is going to be a problem, that problem book, what you may call watch list, if you please, that also has gone down to 7,600 crores. Gross slippages for the quarter stand at 3,700 crores.
46 crores.
How does that compare with previous? That's a fall then.
No, that's a rise of about 1,000 crores. Of about 1,000 crores. So 2,777 in the previous quarter. However, you look at the overall slippages, approximately 1,900 crores has come from the corporate segment, of which 98% is from the watch list or the BB and lower rated book. But BB and lower rated book has also declined.
Come down.
Just one point to highlight, there is a small divergence in the FY18 numbers. Very small, because divergence is the difference what RBI recognizes as your gross NPA and what you have reported as your gross NPA. So that's about 225 crore. In two accounts. Out of both have been downgraded in H1 by the bank, and they have made an additional 100 crore provision in this quarter. So the profit would have been higher by 100 crores had it not been for this divergence. So there is a one-off provision which is non-recurring in nature. So the profit, even though it has beaten our expectation, would have been much higher had this divergence not been there.
Oh, that's okay. I think 200 crores is a matter of judgment. In such a large book, which is 5.1 lakh crore deposits, I think 200 crores won't even be noticed. I don't think we need to make much about that. It's a very pleasing set of numbers. Axis Bank, of course, has been rewarded even as a share. We should pull up a 6 month of that stock. It's been doing very well. Let's get some expert commentary. Lalitabh Srivastava, Associate Vice President at Sharekhan, has joined us. We also have Siddharth Purohit and Kajal Gandhi with us. Well, you go first, Lalitabh. What are the highlights for you?
Yeah, clearly the reduction in or the improvement in asset quality is the most important highlight. Margins and all those things are offshoot of how much slippages were there. That is one big positive. Advances, we were actually slightly ahead of street in terms of expectations, but on the numbers, P&L part as well as balance sheet growth, I think we are positively surprised on this.
Okay. No mention of IL&FS, Abhishek?
See, Lata, they had an exposure of 825 crore in the IL&FS, of which 539 crore is already in the BB and lower rated book. So you have a marginal 286 crore standing on your portfolio. So even if they classify, they have not mentioned anything, even if they are classified, it would not have, moved the needle much for them. Okay.
And in any case, I guess since the overall book has remained, bad book has not increased, it's not a worry. Siddharth, what are the highlights for you? Are the results ahead of your expectation, below your expectation?
Yeah, the results are ahead of my expectations in most of the count, whether it is business growth or in terms of asset quality also. Slippages, well, it is little higher than last quarter, but as Abhishek was saying, probably part of the IL&FS exposure has been classified as NPA.
Yeah.
So, and the biggest relief is that, there is a reduction in the watch list. So I presume that, whatever reduction is there, it might have fallen into NPA. And if I just quickly calculate, then the watch list amount works out to something close to 1.5% of the, loan book. So it's still manageable. I think it's not a point of
7,000 crores. I mean, it's really small. 7,600 crores.
It's not a point of worry anymore.
Okay.
So I think on asset quality, it's moving in the right direction. But maybe I was expecting that since there is a change in the management, they might try to clean up much faster than expectations. So anyway, since the amount is not very alarming, so
no, it's quite possible. Well, you must remember that he took over only on Jan 1st or on December 20th. This is really the Shikha Sharma Srini Varadarajan performance. So if the performance is good, the credit is to the previous management. If there is any more kitchen sinking, we don't know. But I would assume that a large part of the NPA for the system itself is recognized. So we shouldn't expect that the new management will throw any bouncers. In any case, this is the previous management number. So good or bad, the adjectives attached to them. And well, two analysts think that it's a very good performance. Kajal Gandhi, what are your comments? Are they up to expectation? What's your rating on the stock?
The results are definitely above estimates on most of the parameters. A couple of things like the recovery has been quite strong, and because of which we are seeing this strong surge in the net profit. Because of that, otherwise I think it would have been largely in line with street estimates, because it's 900 crore recovery and couple of sale of assets, strategic sales, which has led to this surge. But other than that, it seems to be a continuous improving trend, and which should add gradually to the earnings, and it can be much faster than what we expect actually.
What is your stock price target?
Currently we have a buy rating with a target of 725. I think gradually the stock should tomorrow take a slight side from here.
Okay, Lalitabh, what is your stock price target, and is a buy, sell, hold, neutral?
No, we have a buy rating on the stock with a target of 720. And I would second Kabil's view that with this kind of results, maybe the stock would go for a re-rating from there.
Siddharth?
Yeah, I had a lower target price of 620 on the stock. Possibly the reason being the stock had rallied a a bit higher compared to other corporate lenders. But I think since the results are good, I think market could still take it in a positive way, and we might revise our target price. The only point probably I would like to hear from the management of the capital raising program. Probably they remain a little lower compared to ICICI.
Oh, so you would expect them to announce a capital raising program?
Not necessarily in this quarter they might raise, but probably for the next financial year they should do it. That's what I'm expecting, because I think on a comparative basis to ICICI Bank, their capital adequacy is written on a little lower side. And if they have to maintain this kind of standard, I believe they will have to.
And it would be always great to raise capital when your stock is at a 52-week high and maybe closer to 720. So I think any announcement makes sense as well. From a stock price point of view, what's the price to book at this point in time for FY19 itself, Lalita? Okay. Catching you unawares? Okay, fine. We will let you go back and do your arithmetic. After all, you have not seen the numbers yourself. Lalita, Siddharth and Kajal, thank you very much for joining us with your first thoughts. So, the entire team of analysts believing that it's a buy, and two of them have a 725 stock. I think very quick last thoughts, because the HCL management is waiting.
It's a very strong set of numbers. 10-quarter high in terms of NII growth. First time above 18%. That has led to a 6-quarter high net interest margin of 3.47. So to me, it looks like a very strong set of numbers being driven from top to bottom in terms of controlling the asset quality and, leading to ROA improvement or the return ratios improvement. So very good set of numbers.
Okay, so Shikha Sharma and Srini Vardarajan leave with their head held high. Okay, over to you, Arif.
Right, Lata, Abhishek, many thanks for taking us through those numbers. So there you have it, Axis Bank, very good third quarter, especially on the asset quality front. But HCL Tech Management is addressing the media as well. So let's cut across to that.
Intelligence can come together to create the next wave of growth and differentiated business outcomes and better quality of life that will be enabled. So this was really a very encouraging and very stimulating platform where HCL brought together several thought leaders to debate on this point. In summary, we have executed our Mode 1, 2, 3 strategy very successfully to create the best mix of products and services, which is quite viable and growing in any economic conditions, be it deceleration in economic growth or uptick in economic growth. I think we have a great mix. Among the Tier 1 service providers globally, we believe we have the great mix of products and services to weather the storm. All this has been made possible by unrelenting commitment by our employees, whom we call ideapreneurs. They've delivered best outcomes, best in the industry outcomes for us. With the confidence in the bookings that we've had and the demand environment, we feel confident of delivering towards the higher end of our guidance. We had guided for 9.5% to 11.5%. Last quarter, we said we will come around the midpoint of the guided range. But given the outstanding performance this quarter, we are guiding towards the higher end of the guided range. With this, I will hand over to Prateek to take you through the next level of details.
Yeah. So we have a quarter which is outstanding by all respects, I think. Like CVK already talked about, we have a 13% year-on-year organic growth, constant currency growth, which is, at stable 19.6% margins. I would like to draw your attention to a few metrics that I have put in my quote, which I want to keep talking about, because that is very important metric which we track. The first one is cash EPS. It is nothing but EPS, but adding back all the non-cash items that are there in the P&L. And that stands at 82 rupees on an annualized basis for this quarter. 82 rupees per share, per equity share. And that is a good 11.4% growth year on year on a last 12 months basis. So calendar year 18 versus calendar year 17, that's 11.4% increase and standing at 82 rupees for the last 12 months. A couple of other things which we want to highlight is the return on equity, which continues to be at 25% plus. And the third metric I want to draw the attention to is return on invested capital, capital that is invested in the business. We are delivering 28.7% return on invested capital. With that, I'll throw it to Darren.
Great. Thank you, Prateek. So from a Mode 3 point of view, it was a solid quarter. We continue to make good progress executing on the strategy that we've outlined over the course of the last several quarters. In terms of the product portfolio, our playbook is really underpinned by a few common elements. The first is focusing on customer success. The second is sustained focus around modernization and innovation and investing in that in our product portfolio. It's working with a set of IP partners, continuing to partner successfully with them, enabling them to be successful, enabling their customers to be successful. And then on the back of these IP partnerships, continuing to make progress in terms of the rollout of new derivative works that we're rolling out across the HCL channel. This quarter, we're very proud. We rolled out 9 additional new products available to HCL customers. These are new solutions primarily across the DevSecOps area, in testing, in application security, around DevOps. And these are some of the areas that we see tremendous resonance and opportunity to bring new solutions and new value propositions into our customer base, both through selling as individual products, but also combined with services to really bring new solutions and new innovation in an integrated package. Finally, in terms of the highlights for the quarter, as most of you are aware, in December we announced the definitive signing of a $1.8 billion acquisition of 7 products from the IBM portfolio. We believe that this will be a very good foundation as we continue to build upon this strategy in the quarters to come.
Right, and with that, it's a wrap on this edition of After the Bell. But do stay tuned to CNBC TV 18. Markets Today Talkback is coming up next.